Let's check in with a well-known investor in Asia who's famous for advising clients to get out of equities just 1 week before the October 1987 crash. He also correctly predicted the recent U.S. stock market bottom in March 2009. That, of course, is Marc Faber. He's the editor of the Gloom, Boom, and Doom report, and he's our guest now live from Singapore. Good evening to you, sir. We just talked about the price of gold hitting a record high there in London today, and the fixing price. You point out in your recent newsletter the price of gold's actually really just half of what it was in the 80s when you adjust it for inflation, right?
Correct. Actually, it's very difficult to say whether the price of gold is expensive or cheap. I think it might be actually less expensive than when it was at 300 in 2000 because of all the money printing that has been going on and because of the increase in debt loads around the world, and also international reserves. They've gone from $1 trillion in 1996 to now over $1 trillion. So one could actually say maybe gold is cheaper today than it was at that time.
Does that make it a good investment right now? Are you buying gold?
Well, I think as long as Mr. Bernanke is Fed chairman, gold will be a very good investment. Since he became Fed chairman, gold has gone up by more than 2 times. And I would also argue that we had essentially a trading range of around, say, 850 to 1,000 that dated back to 1980. And the breakout of gold above 1,000 is very meaningful as long as the $1,000 level holds. If gold should drop below 1,000, then I would be very concerned that there could be a counter trend move that would be very violent. But as long as gold holds above 1,000, I think it could be like a breakout move such as we had in the Dow Jones in 1983, when we moved really for the first time above 1,000 after having traded between 1966 and 1982 between, say, 700 and 1,000.
Sir, you're joining us from Singapore. We're looking at Asia broadly now, particularly because the President of the United States is there on the ground. You are finding opportunities in the emerging markets in Asia right now. What do you like? What are you buying?
Well, basically, everything is relative. I mean, the opportunities are not as good as they were last March, when the markets were extremely oversold and valuations were extremely depressed worldwide. Now I would say there are still some opportunities. Stocks are not terribly expensive when we compare them with zero interest rates, and that's very crucial. I think that the unemployment situation in the US and the government's administration is so bad, I have to stress, so bad, that Mr. Bernanke will keep interest rates at 0% for a very long time, and that more stimulus will be needed. And so equities are some protection against this monetary inflation.
Which markets are you buying in?
Well, I'm not buying very much because I already bought, but let's say I would probably add to some positions here in Singapore, in Malaysia, Indonesia, Hong Kong, and also Thailand.
Okay.
And I think also Vietnam is quite an attractive market at this point.